You marked the level perfectly. Liquidity was taken. Structure shifted. Everything aligned. You even told yourself, this is it. Your model was clear. Your rules were met. The setup looked clean. Your analysis was sharp, but you did not enter. You watched the candle respect your zone. You watched the shift confirm your bias. Your finger hovered over the mouse. Your mind started negotiating. What if it sweeps again? What if this one fails? What if I am wrong this time? So you waited, and then price moved exactly how you expected. It expanded. It respected structure. It delivered the move you planned for without you. That feeling hit immediately. Regret. You felt stupid because you saw it. You felt behind because others probably caught it. You felt like you keep doing this to yourself. You did the hard part. You analyzed it correctly. But when it was time to execute, you froze. Let me tell you something clearly. You do not struggle with analysis. You struggle with execution. You do not lack knowledge. You lack trust at the moment of decision. Today, we are not fixing your strategy. We are fixing the fear behind your hesitation, because the real problem is not your chart. It is what happens in your mind in the 3 seconds before you click. Hesitation is not lack of knowledge. It is fear disguised as caution. Most traders convince themselves they are being disciplined when they hesitate. They say, I just want more confirmation. Let me wait for one more candle. What if it reverses? That sounds logical. It sounds responsible. It sounds like risk management. But most of the time, it is not strategy. It is memory. Hesitation is often a trauma response from past losses. At some point, you took a similar trade and it stopped you out. You followed your plan and it still lost. You felt frustrated. You felt embarrassed. Maybe someone else posted profits at the same time and you compared yourself. That moment created a small emotional scar. Now, your brain remembers the pain more than it remembers the rules. So when a similar setup appears again, even if it is clean, your nervous system reacts first. Your body tightens. Your thoughts become louder. Instead of executing the model, you start protecting yourself. The chart has not changed. The market has not changed. But your internal state has. And quietly your brain whispers, do not get hurt again. Now, let us go deeper into the hidden reasons behind that hesitation. The first is recent loss bias. If you lost recently, your brain shifts into defense mode. After 2 stop losses in a row, even your A+ setup feels dangerous. It does not matter that your edge works over time. In that moment, your mind is not thinking in probabilities. It is thinking in survival. It wants to avoid another emotional hit. The second is perfection addiction. You want certainty. You want the trade that cannot fail. So you tell yourself you are waiting for confirmation. But the truth is, you are waiting for zero risk. And zero risk does not exist in trading. The more you try to eliminate uncertainty, the more you delay execution. The third is fear of being wrong publicly. This hits harder if you share trades, if you are in a trading group, or if you constantly compare yourself to other traders online. Losing starts to feel like exposure. It feels like people will see that you are not as good as you want to appear. So hesitation becomes protection of your image. The fourth is overanalysis paralysis. Too many confirmations, too many timeframes, too many indicators, too many opinions from other traders. Instead of clarity, you create noise. Instead of conviction, you create doubt. The result is simple. You freeze. The fifth is identity fragility. This one is deeper. You attach losses to your self-worth. When you lose, you do not just think that was a bad trade. You think maybe I am not good at this. Maybe I do not have what it takes. That pressure makes every entry feel heavy because it is no longer just a trade. It is a test of who you are. And that weight creates hesitation. Hesitation does more damage than a controlled loss. Most traders believe that by not entering, they are protecting capital. But what you are really protecting is comfort, and that comfort is expensive. When you hesitate, you miss proper risk to reward opportunities. The setups that align with your model pass without you. Over time, that destroys your expectancy. Not because your strategy failed, but because you failed to execute it. You also break trust with yourself. You told yourself this was your setup. You defined the rules. You waited patiently. Then when the moment came, you did not act. Every time you do that, your internal confidence drops slightly. Not loud, not dramatic, but quietly. And self-trust is everything in trading. Then something predictable happens. You start chasing. You skip the clean entry. Price moves 30 or 40 pips in your direction. Now fear turns into urgency. Suddenly, you want in. You enter late at a worse price, with worse structure and worse risk to reward. Then the market pulls back. Now you are in drawdown. Now you are angry. You did not avoid pain. You delayed it. You turned a disciplined loss or win into emotional chaos. Understand this clearly. The pain of a planned loss is smaller than the pain of regret. A controlled stop loss hurts your account slightly. Regret attacks your confidence, your discipline, and your emotional stability. One is a business expense. The other is psychological erosion. Now, let us fix this at the root. The first step is defining your A+ setup in writing. Not in your head, on paper. Clear, measurable conditions. Break of structure confirmed. Liquidity taken. Entry condition met. If your model says these 3 things must happen, then when they happen, the decision is mechanical. Clear rules remove emotional debate. The market provides the signal. You provide the execution. The second step is pre-accepting the loss. Before you click buy or sell, tell yourself this clearly. If this loses, I am still disciplined. That sentence is powerful because it separates outcome from identity. It tells your nervous system that loss does not equal failure. That reduces tension at the moment of entry. The third step is reducing risk slightly. Sometimes hesitation is not about the setup. It is about position size. If the risk feels heavy, your brain resists. Lower the risk. Build consistency. Stack clean executions. Scale later when confidence is built on evidence, not emotion. The fourth step is tracking hesitation. Most traders journal wins and losses. Few journal skipped trades. Add a column. Was the setup valid? Yes or no? Did I hesitate? Why? When you track hesitation, patterns become visible. Awareness reduces repetition because you can no longer pretend it is random. The fifth step is reframing execution. You are not trying to win on every trade. You are trying to execute correctly. Winning is a byproduct of correct execution over time. Execution is the real goal. When you shift from outcome focus to process focus, fear loses power because the only question becomes simple. Did I follow my rules? Strong traders are not fearless. They are prepared. That is the identity shift you need to make. Stop believing that confidence means feeling nothing. The strongest traders still feel tension before entries. The difference is they are anchored to structure. They understand that loss is part of the model, not a surprise, not an attack, not a sign that they are not good enough. It is built into the business. When you truly accept that, you stop reacting emotionally to every outcome. They also understand that hesitation is emotional leakage. It is what happens when feelings override rules. It is not a strategy flaw. It is a discipline flaw, and discipline is trainable. Confidence is not built by winning big trades. It is built through repetition of correct execution. Small, boring, consistent repetition. Every time you follow your rules, even if the trade loses, you strengthen your identity as a disciplined trader. Every time you hesitate on a valid setup, you weaken it. You do not need courage to trade. You need rules you trust. Courage is unstable. It changes with mood. Rules are stable. They do not negotiate. They do not panic. They do not compare. When your system is clearly defined and tested, execution becomes a responsibility, not a gamble. The moment you define your system clearly, fear loses its negotiation power because there is nothing to debate. The conditions are either met or they are not. Your job is not to predict. Your job is to execute. Your hesitation is not weakness. It is protection from an older pain. At some point, trading hurt you. A loss felt heavy. A mistake felt embarrassing. So, your mind built a defense. That defense shows up as delay, but protection becomes limitation when it blocks disciplined execution. What once kept you safe now keeps you small, and growth in trading requires calculated exposure to risk. You do not need a better strategy. You need a calmer relationship with risk. Risk is not your enemy. Emotional reaction to risk is. If you have ever watched price move without you, comment one word below. Hesitation. Not for me. For you. Because naming the pattern is the first step to controlling it. Subscribe to the Daily Trader Mindset if you are ready to stop negotiating with fear and start executing with